Good evening. Sorry, it's the network issue. I've been trying to connect since. Hello, good evening. Today,
Good evening, sir.
yeah, sorry, it's the network issue. I've been having serious challenges with the network. So now,
You can start the class now.
my name is Adebayo Desalu. I'm the second facilitator that will be taking us through the professional course in advanced audit and assurance. Today, we are starting with, I want to believe that I also want to stand on existing protocol by my first facilitator, which he has put us through on all those protocols. I will not waste time on that. So we're starting with this topic that we have that I've shared on the screen, and the topic is on rules of professional conduct. Now, about rule of professional conduct, what it means is that in every profession is governed by rules and procedures, and especially there are codes of ethics or code of conduct that guides every profession. As we have in accounting, so we have in other fields, medicine, law, other fields you can never think of. They have their code of ethics. So what is important or imperative is that every member, whether you're a prospective member of the institute or an assurance provider, what I mean by prospective member means that maybe you are at the verge of qualifying, so you're a member, you're already a member of the institute. Now, whether as a student membership or registered membership, you're a member. So also as assurance provider means that, okay, maybe you are not practicing as the public space, meaning that you work with an organization, so you're an assurance provider. So every one of us that is a member of the Institute of Chartered Accountants of Nigeria is expected to imbibe this code of ethics. And also, I also want to assure us that this is one aspect that cuts across every paper you are going to write in this syllabus. I also want to remind us that this syllabus is ending. This is the last day they are going to test the syllabus. And based on the symposia that we have had before now, we made to understand that at least at this level, professional level of the examination, a question is coming out under this topic, rules of professional conduct. I hope you all are able to see the last exam, the last diet that came up. You will see that you agree with me that the number one question is on this topic, rules of professional conduct. So it is very, very imperative that we understand this particular topic. Now, what you also need to understand, I want to also believe that most of us have background or knowledge on this rule of professional conduct, so I will not waste much time on this. Now, what we also want us to understand is that ICANN does not exist in isolation. What I mean by that is that ICANN is a member of a larger representation of another organization known as International Federation of Accountants. And the International Federation of Accountants also is the parent body for all those practicing accounting globally. So, and the aspect, the IFAC is the International Federation of Accountants, and there are two bodies under it. You have the International Standard Committee, National Accounting Standard Committee or Accounting Board that is responsible for the issuance of National Federation, International Financial Reporting Standard that we call IFRS is one responsible for that. So that's an aspect, a branch of IFAC. The second aspect or branch of IFAC is IASB, that is the National Audit and Assurance Standard Board, which we belong. That is anything we are talking about in audit and assurance, must come from that arm or that unit. So that unit also has another body that is represented or that is also a member of IFAC, which is IESBA, International Ethics Standard Board for Accountants. They are the one responsible for issuing the code of ethics for the accounting. They are the one responsible for issuing. Please mute all your speakers, please. Mute your speaker, thank you. So they are the one responsible for issuing all, hello, mute your speakers, interference. They are the one responsible for issuing all code of ethics that guides the accounting profession. That guides the accounting profession. So you are, so before now, what we have learned over time is we have standard, we have certain code of ethics, and some of them I've mentioned them now. The one that we have been used to is the one that has been issued by the International Ethics Standard Board for Accountants. And those standards are objectivity, confidentiality, hello, interference. Hello, hello, class. There's an interference.
Sorry, sir, I've muted in.
Okay, thank you. So sorry for that interruption. As I was saying, all this while that we have been writing ICANN examinations, the ones that we are conversant with are 5. And those ones are the ones issued by the International Ethics Standard Board for Accountants, IESBA, which is a member of the IFAC itself, parent body. So the ones we are conversant with are objectivity, integrity, confidentiality, professional behavior, and technical competence. Those are the ones that we are conversant with. Now, ICANN also, they have their own code of ethics that guides its members. And the one that guides its members are the ones that we have listed here. There are 5 of them. You have independence, you have objectivity, you have integrity, you have conflict of interest, you have confidentiality. So these are the 5 that guides the Institute of Chartered Accountants of Nigeria. That's the accountants practicing in Nigeria, whether as a public or in the private sector of practices. These are the ones that guide us. So I want to say, because in an examination, you might be in a fix saying that I have the ones I know. The ones I know does not include independence and conflict of interest. Yes, like I told us, that is the one issued by IESBA, and ICANN is a member of IESBA. So if the question, for instance, is silent on the code of conduct or code of ethics that guides the accounting profession in Nigeria, you can give them all. That is 7 in all. That is these 5 that I've given, that you have here on that I've shared on the screen, and add it to technical competence and professional behavior. Add it to it, that will be 7. But if the question is specific on the one that is issued by this members code of conduct of the Institute of Chartered Accountants of Nigeria, please, I would like to recommend that let's stick to these 5 that you have on the screen. And that's what we are going to deliberate on now. Without further ado, let's start. The first one is independence. Independence is a rule, is a code of conduct or code of ethics that is divided into 2. So we have independence of mind and independence in appearance. Now, independence of mind, as defined, it means a state of mind that permits a provision of an opinion without being affected by influences that compromise rational judgment. What they mean, and that is allowing an individual to act with integrity and exercise objectivity and professional judgment. What the other one means is that we are saying that it's a state of mind that is characterized with what? Having an independent view with nobody influencing your decision. And let me give us an instance. Now, if you find yourself in amongst the engagement team, let's say you are the engagement partner that's going to audit a company like Dangote Group of Companies, and you are opportune to sit at the opening meeting with or closing meeting with the chairman himself, the managing director himself, or the chairman himself, that's Aliko Dangote himself. And you are now opportune. So you are taken away, or you are carried away by the fact that, oh, this is an opportunity for me to show myself. And maybe there are some, I'm just saying now, maybe there are some things that are not right with the financial statement that you have just reviewed concerning that company. And you now say that I don't want to paint myself in a bad light before this man. You understand? So even if it's bad, I will try and say that everything is okay. That means you are allowing someone's influence to affect your own sense of professional judgment. That's what it means by independence of mind. So there should be no interference at all. There should be that sense of judgment, professional judgment, that cannot be beclouded or be influenced by whoever or whatsoever situation you find yourself. Say it the way you saw it, the way it's supposed to be, the way it ought to be. That's what you should say. That would be my independence of mind. And by independence in appearance, we are saying that it's the avoidance of fact and circumstances that are so significant a reasonable and informed third party having knowledge of relevant information, including any safeguard applied, reasonably conclude a firm's or a member of the assurance same integrity, objectivity, professional skepticism has been what compromised. So what they are saying here is that most times when you give a judgment, give an opinion on financial that you have reviewed or you have audited, most times it's not because of you that you are doing that. You are doing because of the way an outsider, that's the public interest, the way you are going to present yourself before them. What's the perception they have about you is what really matters. So if you are saying that you have done something that is very independent, but your actions and your behavior says otherwise. For instance, you have worked with, you say you are auditing your client, and they saw that when your client, maybe in the course of the year, they had a summit or a retreat in Dubai, and they now invited you to come along with them. You are not part of the management board or board of directors, but they invited you and you honored the invitation and you went with them. So an outsider, a public interest person, might have another opinion about you, that for all these things you are doing, you might not be independent in your approach or your manner of approach when you are auditing this client. That's the way they see you. That's the way the public describes you. And that will be very wrong. So that's what they mean by independence in affair. And that is not walking the talk. That is not practicing what you preach. You say you are independent, but they see you fraternizing with the client in all ramification. So they will not say that there is no demarcation, or there's no distinction between you and the client. So they will, anything you say, they will say that they will not believe you. They will say that you lack integrity. That's what they mean by independence in appearance. So that's the difference between the two. The first one is having a clear mind to give an opinion without any form of what influence or bias. Say things the way they are. The second one is acting the way the public will not be able to prejudge or presume that you are not independent in the act of audit engagement that you are doing. So that is what it means. The second one is objectivity. Objectivity means having a fair sense of what professional judgment, being objective in anything that you are doing. So it means that you should not allow your emotions to take a better part of you when you are carrying out your audit engagement, or you are doing your carrying out your review or audit of financial statement. So let me give us an instance. Now, for instance, remember there was a time that we had, there was this senator that humiliated a worker. He says gay at sex shop. That's Senator Honorable, I don't know whether I call this Honorable or Senator Elisha Abu. Remember that when that incident happened, the police were called to investigate what happened. Then the Senate committee they also set up a committee to investigate what happened, what actually led to that. You understand? They talk about that too. So what we are saying here is that you remember that time, the head of that committee was Oluremi Tinubu. Chief Oluremi Tinubu. That's the senator representing Lagos Central. Now, what do I want to bring out on this point? Now, if you watch that video that time when he was questioning the guy, the senator, he became so emotional, you understand? And that was why he was had to step aside as the head of that committee because he's sitting on the position that can influence others. So they had to let her go and let another person to take his position. That's what they mean by objective. So when you are saying things the way it ought to be, having an open mind, don't have a prejudged mind. You understand? Don't be have that prejudged mind saying that whatever I'm going to say, there is something within me that I will use to bamboozle everybody. No, have an open mind so that and the public will see you as somebody that is what very honest and very straightforward. That's what it means by being objective. So when they say that you are being objective or you should be objective in whatever you do, that means that you should have a clear sense. That means your thought process should not be faulted. You'll be able to think clearly and be able to think in the best way you can so that people will not say that you are biased in your sense of what your judgment. Another thing another code of ethics you need to also understand is integrity. Now, integrity has to do with state of what? Has to do with state of being honest and straightforward, transparent. You understand what they mean by honesty? That is a state that imposes an obligation for professional chartered accountant to work to be straightforward and transparent. That's what that one means. So what they're saying here is that you should be able to stand for the truth at all times. When you see that things are not right, don't say anything. Don't take side. Stand for the truth. Stand for the truth at all times. When you are carrying out an audit of your client's financial statement, stand what you see as the truth is what you should stand with. Don't take any other position. So some of the examples we want to give for independence. Some of the examples we want to give for independence are one, auditor. So the way the public will see you that you are independent is when you don't have beneficial interest. You don't have beneficial interest in the equity of your client business. For instance, your client sells equity or has equity, or you have a stake in your client business. There's no way you are going to say you are independent. The public will never see you as independent because you have a stake in that business. It is believed that you will never be upright. You will never be straightforward. You understand? You will never be objective in all that you do. That's what they mean by that's an example. Another example is when you accept your audit fees based on the success factor of your audit engagement. For instance, your client will tell you that, for instance, I will only pay you certain amount of money, X amount of money as audit fee, if you tell me that my account shows a true and fair view. You understand? So it means that your fee is dependent on the success of the audit engagement. So if you have any query or you qualify the report, that means you will not be able to get that amount or that fee that's supposed to get ordinarily. So that's another example that you can charge as independent. So you will not be independent in your mind. Another instance is when you have a blood relationship with a client. You can never be, the public will see you as, you might say you are independent, but the public will never see you as someone that is what? Independent. They will never believe that you are independent. So they see you as somebody that has a biased mind. So, and that also cut across your objectivity and also cut across your integrity. So another thing you also need to understand with integrity is any document that you have not reviewed, don't append your signature. Don't be put under duress at any point in time to sign a document that you have not thoroughly reviewed. Don't allow yourself to be put in that kind of situation. Before you sign a document, make sure you understand it and you understand the implication that comes with it. You understand? So that is what they are saying. Remember the last the VC that was removed from University of Lagos, West Ogundipe, the chairman that led the visitation panel, if you heard in the news last week, he was saying that he regretted signing that report, because maybe he was prejudged, or they gave him some information so that he'll be able not to be able to be independent in his thought and deed or action. That's what we are saying. So you should make sure that you always act in the best interest. So that's for independence, objectivity, and integrity. Now, the next one we want to talk about is conflict of interest. Conflict of interest. Now, conflict of interest can be looked at from two angles in under the rule of professional conduct. The first one, conflict between members and clients. Conflict between members and clients. So what they are saying under this first one is conflict between members and clients is this. Now, what they are saying here is that whatever you do, ensure you are in the right position or right frame of mind with the members of the public. That's what this one is talking about. So the public should not be able to prejudge you and say that no, you can't be independent. For instance, this example relates to the first one, that is conflict between members and clients. Now, you have some clients that you render service to, and those your clients at a point they now say that they needed to change their accounting software. You understand? Which is normal for any business. That they now come to you and say that okay, you want to change the accounting software. You now say that see what you now say that can you recommend any good software for us? Now, before that time, you had a friend, that vendor that deals in accounting software or accounting packages. He has already told you that if you bring clients to me, I'm going to give you 10% or 5% or 1% or whatever percentage of whatever sales that you make. You understand? So what happens in that instance is that you now recommend that same person to that your client. You know, the client does not have that knowledge, was not privy to that earlier information that you had an understanding with that vendor. So we just say that you just believe that you know better. So whatever you give him is that it's going to suffice. So you now inform the vendor. The vendors implemented the new accounting package for your client. You understand? Not knowing that client has been changed, meaning that the vendor has added that portion, that fraction that is going to give to you, has added it to that, incorporated it in the fee that is charged for the implementation or even for the software itself. But the client did not know. He doesn't know. He doesn't know, you understand? So in that instant, what we are saying there is that there is a conflict, because the best you will have done at that point in time, if you want to be really straightforward, is that you tell that your client that, oh, I have a vendor. The vendor says that if I bring a client or somebody to him, I'm entitled to a fraction of it. If you tell him and that same client still wants to go ahead with that same vendor to help with the implementation of the accounting package, the accounting software for his organization, then that means you don't have any issue. And that means you have made it known to the client, and the client does not have any reservation about that. So he said, okay, no problem, I don't mind, because he trusts. So in that instance now, there will be no conflict of interest. But when you do it the way that I've earlier said, without the premonition of the client, then what you have done is it amounts to what? Conflict of interest between members and clients. I hope that is clear. The second type of conflict of interest is one that they call conflict of interest or conflict between competing firms. Conflict of interest or conflict between competing firms. Now, what the one is saying here is that to the outsider, they see you are the one. For instance, let's pick two competitors together now. Coca-Cola and Pepsi. 7-Up bottling companies are the makers of Pepsi Cola. While Coca-Cola bottling company, that bottling company is makers of they are the makers of Coca-Cola. Now, what we are saying in this instance is this: if it's the same audit firm that is auditing Coca-Cola and Pepsi Cola, that's 7-Up bottling company. Now, the client, the competitors, they might not know. But if they don't know, then that will amount to conflict between competing firms. Why is that an issue? Because they are competitors. And the way and manner, their trade secrets, the way they present their account, all are in your beck and call. You have all the information. if you want to spoil market for the other person, you can divulge the information, and that other person will lose the market share. And the same thing applies vice versa. You understand what I'm saying? So what we are seeing in that instance is that the only way you can guide against that from happening is if you tell your competitor, for instance, you are doing auditing Coca-Cola, you tell Pepsi Cola, that's 7-Up bottling company, that, oh, sorry, I'm also the auditor reviewing or auditing the financial statement of Coca-Cola and your competitor. But I'll sign an SLA that I will not divulge any of your information to Coca-Cola and vice versa. If you're able to do that, there's no conflict. But if you are not able to do that, then that will amount to what? Conflict between competing firms. You understand? Conflict between competing firms. So that is how you resolve that. I hope that one is also very, very clear. If you have any question, you can use the chat box to ask your question. The next code of professional conduct is, or code of ethics is called confidentiality. What this one means is that under no circumstance should you, as an accountant, divulge or disclose your client information to either third party or persons that are outside, that's the public. Whether your friends, your colleagues, you understand, professional colleagues, don't divulge your client information. That's what it means. That's what it means by confidentiality. That's what the principle says, or that's what the code of ethics says about that. But there are some instances where disclosure will be required. For instance, when it is in a court, a case in the court of law, and you are told or you are being summoned to come and produce some document that will be able to throw more light on that particular incident or that litigation, then at that point in time, you don't need to hold back any information from your client, from the court or from the public. Come to the place and divulge all information that you have. Another one also could be when it's at the instance of the law. That's law enforcement agent that calls you that, oh, come and give information as to this. Come and tell us if you are not aiding and abetting, for instance, tax evasion, or you are aiding and abetting money laundering activities. So at that point in time, you need to come forward and divulge whatever information you have concerning the source of income of the client and whatever other relevant information that you deem fit will be necessary to either vindicate you and also throw more light on the information that is being required. That's what it means. Also, there is this law that IESB, that's National Ethics Standard Board for Accountants, issued sometime, I think 2016 or so, 2017, there about not clear, non-disclosure against laws and regulation. Non-disclosure against laws and regulation, no clear. So what that one is saying here is that the summary of that document is that when you find yourself in an organization or in a situation where things are not done the way it's supposed to be done, that is globally acceptable best practice, the best thing you can do is to report to relevant authorities, relevant enforcement agencies to come and take action. You understand? That's what it means. So what we are saying here is that, so for instance, if you work in an organization where they don't remit their taxes, their statutory deduction taxes, that's payee, and your pension that they've deducted as source from your salary, and they don't remit it as a wage due. So you are at the point where I'm going to say that you are at liberty to work up to PENCOM, to work up to LRS, FRS, all other relevant enforcement agencies to report and get those people arrested. That's what the law says, so you understand. So if it's ICANN examination and writing, that is what the law says, you understand. So we need to be very careful about that. So that is all that I want to say concerning those code of ethics. And if you want me, let me throw more light on the other two that I mentioned. Technical competence. What that one means is that as an accountant, we should always update our knowledge. We should not wait. We should not rest on our oars. That means we should always keep updating our knowledge. And how do you do that? There are several ways ICANN has given us platform You can update our knowledge. Like all these, there are MCPD programs, that is mandatory continuing professional development, that is being done every month. I think so. So we are expected to attend those seminars, those workshops, so that you can add more to your knowledge. You understand? So that's the best way. And also, you also expected to belong to one or two committees, faculties of the institute. You know, the institute has about 6 or 7 faculties, which we expect. So what that one means is that on the day, I pray that all of us succeed as a sit for this examination and we pass. So on the day of induction, you'll be given 2 forms. You're given a form that they will tell you to give us the faculties that you want to belong to. The maximum you can get is 3 faculties. There are 6 or 7 about thereabout. So you have a maximum of selecting 3, but minimum is 1. You understand? So you're there to belong to one. For instance, you have the audit and investigation faculty. You understand? You have the tax and fiscal policy faculty. You have the information technology faculty. You have business continuity faculty, business continuity and business recovery faculty. You understand? So they are on like that. There are about 7 of them. So these are ways ICANN has sort of specialized their or create specialization for their members so that they can become a guru or technocrat or expert in certain areas. You understand? So that's the way that one talks about that. You need to keep updating yourself. You understand? All those and the MCPD, that's Madi Continuing Professional Development, attract certain credit hours. I think it's 15 hours for each of them. You understand? So if you take 2, and you have to take 2 in a year, so if you are able to get 30 credit hours in a year, you are good and fine. The 7th one, which I said is part of those ones we had before, is professional behavior. What it means is that at any point in time, chartered accountant is expected to display professionalism in whatever they do. For instance, you are not expected to use foul languages against your client. You're not expected to talk back, you're not expected to shout, you're not expected to abuse, you understand? You're not expected to fight. How do you mean by professional behavior? Yes, you should exhibit decorum in your behavior. You should exhibit decorum. You should be able to be calm, cool, and connected. You understand what they mean. If somebody upsets you, there are ways you can handle it. You don't need to fight. You don't need to blow up. You don't need to, and you should also dress properly. Don't dress like area boys when you are going for an audit. No, it's not expected. So that's what they mean by professional behavior. I think I've been able to explain all the code of ethics that guides the professional conduct. If you have any question, you can ask me. I'm ready to answer you. My phone number, in case you want to send any question, maybe later on, is 080 36 32 6648. I take it again, 080 36 32 66 48. So I'll be glad to attend to your questions. So let's go on. The next one we are looking at threat and safeguards. It's also part of this topic. You need to understand threat and safeguard. So what are threats? Threat is anything or circumstance that attempt to breach compliance with the fundamental principles. What we are saying here is that anything that prohibits us from exhibiting all those 7 principles that we have talked about is a threat. Understand? Anything that stops us from exhibiting all those things we talk about is what is seen as what as a threat. So, for instance, the threats that we have, there are 5 of them. We are going to look at them one after the other. The first one is the self-interest threat. As the name implies, is a threat to the auditor's objectivity, stemming from a financial or other self-interest conflict. What it means here is that it centers on basically on the auditor himself, trying to protect what belongs to him. You understand what they mean by self-interest threat? As the name implies, self-interest, always trying to protect that which belongs to him. And for instance, how does that happen? Having a close relationship with your client can be seen as what? Self-interest threat. You understand? Self-interest threat. Another thing is having concern about possibility of losing a client. So if you have a client and it's worried that that client, you might lose that client. And maybe it's one of those people that are your very regular guys. Customer that you understand. The regular guy, the regular client that settles on time, doesn't hold your fee, you understand. If such client wants to leave, you might want to do anything that is within your power to keep those clients from leaving. You understand? So that's what they mean by self-interest threat. Another example could also be from having about 25% of your audit fee coming from one particular client is also what it can be seen as self-interest threat. What that one means is that you have like 6 clients and your total audit fee, annual audit fee, is about 10 million, and one client alone is giving you like 3 million or 4 million thereabouts. Even if you have other clients saying that they need your attention, there is evidence that you give more attention, more priority to that one that contribute about 40% or 30% to your annual turnover, annual audit fee for the year, for your annual audit fee. You understand? So you are tend to give more support in all areas to that kind of. So what do you mean by self-interest threat? You get. So the second threat is called self-review threat, and that emanates from when a previous assurance engagement or a non-assurance engagement needs to be re-evaluated in reaching conclusion on the assurance engagement. You understand what they are saying here is that you have already concluded your audit engagement. You submitted the report. Now, somebody now picks that report and says that he wants to do another review of that your report, which is more like a code review of that your report. There's anything that you will not be set. You'll be thinking that maybe this person will find fault in what I've done. That is, if you have not done the thorough job. I think that this person might find fault in what you have done. That's if you have not done a thorough job. That's what they mean by self-interest threat. So just like also, you go to your client, you want to sit with the account of finance department, you want to audit their financial statement. They are always not at ease, you understand, because nobody will think that if they've done anything on this person, this auditor will fish them out. So that's exactly what we are looking at when you look at self-interest threat. We self-review threat. So there is that tendency also. The third threat is called the advocacy threat. Advocacy threat, and this is where the auditor plays. This is where the auditor plays like an intermediary or try to settle disputes between two opposing clients. That's advocacy. When the auditor tries to settle disputes or disagreement between two opposing clients, you understand? So unless you have been appointed as an arbitrator, you do not settle disputes. You shouldn't mend fences when there are disputes between clients or anybody. You understand? You are not expected to interfere. But unless you have been appointed by the industrial court as an arbitrator, if you are not expected to do that. So that is what that one is saying. And how do you do that? For instance, your client wants to go public, you want to sell shares. You are not the reporting accountant. We now tell you that you now say, don't worry, help you to promote their shares. You now start to promote their shares, try to advertise for their shares for people to come and buy the shares of that company. So that is a way of doing what? Advocacy for the client. Another way you do that is your client has told you, you said he has an issue. What's the issue? Because he confided in you or he confides in you that there's this also and so person that I'm trying to settle issue where but unfortunately, you know that person. I said, don't worry, I've worked with him before, I know how to intercede and everything will be settled. What he's saying is that at no instance should you do that unless you have been appointed as an arbitrator before you can do that. So that's what they mean by advocacy threat. The next one is intimidation threat. That one, as the name implies, intimidation. That occurs when a member of the assurance team may be deterred from acting objectively or exercising professional skepticism by what? by threat, actual or perceived, from the director, officers, or employees of the assurance client. That's what that one is saying. You understand? So what that one is saying is that, for instance, you have oh no, there's nothing there. I'm not sure. Let me check. I think it's question we have. Okay, sorry. Okay, it's even there. Sorry. So the intimidation threat. So that's what they are. What are they? Thank you. What that one is saying here is that you have you are carrying out an audit for your client, and the client, the directors, they are telling you that, see, this audit you are doing, if you qualify this report, I won't take it easy with you. I'm going to sue you. I'm not going to pay your audit fee. You understand? All these are threats, whether they are empty or they are seen as what threats, and they amount to what intimidation. Or you want to carry out and perform an activity when you want to do a stock, and that you don't need to do stock and go just do your audit and get out of here. You understand? Or you say you want to spend 3 weeks, you can only spare you 1 week. Anything after that, you go and do it in your office. All these are intimidation threats. So that's what they mean by intimidation threat. Then you have familiarity threat. Familiarity threat. And that one, as they say, familiarity breeds contempt. What that one means is that when you are too familiar with somebody, there are some things that you will ordinarily you will not have condoned. But because you are too familiar, you know the person in total, you understand, you share in everything with that person. Things you ordinarily you don't have accept, you start taking it as part of normal. It becomes your new normal. You understand what they mean by familiarity. So these are threats that happens. These are threats that happens. So what are the safeguards for this? Now, the first game safeguard is safeguard. The first safeguard is the safeguard that are created by the profession, legislation, or regulation. What does that mean? These are the ones that are given by the institute. For instance, constant training, education, and increasing your wealth of experience in whatever form or shape. That is one way. Another is engaging in continuing professional development. That is trying to attend all those mandatory continuing professional development (MCPD). You understand? You can also review personal standard and monitoring of disciplinary processes. That is, these are ways in which you can what safeguard that's one of the ways you can reduce. You can, for instance, you can let me take it. I mean, tell us you cannot eliminate this threat. You can only reduce it to the parents. You can't eliminate it. So it's a threat that cannot be eliminated. That's what we are saying. So that is one way you can do that. That's one way you can do that. So if you take all those things into cognition, then all these things will be catered for. So another one we also want to look at is safeguard created by the work environment. Safeguard created by the work environment. So safeguards that are created by the work environment are, for instance, all those policies, procedures, all those policies, procedures that guides your organization, you understand? Policies that guides your organization that emphasize on fair reporting, financial reporting. That is when you are right, when you are preparing a financial statement, you should be diligent, exercise due care, skill and diligence when you are doing it. Also says that if you having a good corporate governance structure in place that shows that there is a proper way and manner a company is being controlled and managed. So you have the audit committee, you understand, you have reviews, you understand, you have all these things in place to checkmate the excesses of whether the management or the auditor himself. You understand? These are ways to do that. The third one is safeguard created by the auditor himself, individual auditor himself. What one means is that your personality, your personal view of life. Understand? You know, they always say that there is a price for everybody, for every person. Everybody has a price. So what they are saying is that how do you deal with that? So what are those things that come to bear when you are alone? You understand with your conscience. What are those things? So first of all, you need to have a clear thought process. Secondly, you should know all your principles, policies, and procedures that guides your profession. Then thirdly, you should ensure that any point in time that you are carrying out your audit assignment, you exercise professional judgment, professional skepticism, you exercise due care, skill, and diligence, so that you don't have any issue at the end of the day. Even when there's someone try to rubbish whatever you have done,
Well, let's start.
Sorry about that. I think it's the network, so I'm back. So I stop at safeguard created by the individual himself. Like I was saying, there are three safeguards. There's safeguard created by the profession, which I've explained, safeguard within the work environment. The third one is safeguard created by the individual auditor. Where, as I was saying, so as auditor, you need to have some restraint, meaning that there are some things you shouldn't do. So, for instance, you need to keep yourself updated from time to time, attend necessary symposia, webinars, workshop that can boost your knowledge on auditing and assurance and accounting as it is. Then there's also the need for you to, when you are carrying out your job, to exercise due care, skill, and diligence at all times. So that's what that one is saying. So you're able, so even if somebody tries to take you to the court or try to put you under unnecessary pressure with your audit working papers, you that will come out to vindicate you that you have really done a thorough job. That's what we are saying as per safeguard. So you have the auditor has a role also to play in that aspect. So let's go on. Let's go on to the next one, ethical conflict resolution. So what that one is saying here is that say we there are times that we find ourselves in a situation where you you need to resolve some conflict. You know, conflict is where it happens where there is there's a conflict between the application of fundamental principles, those code of ethics. For instance, when there's a clash between the two of them, you understand. So for you to now say which one is the best way, which one is the best approach, the best way out, so you need to look at it. When you have something like that, these are the steps you need to take. First of all, to resolving the conflict is first of all look at the relevant facts, look at the case in totality, its entirety, look at it from beginning to the end. Try to look at the case and look at those relevant facts that are inherent in the case. Second one is look at the ethical issues involved. For instance, what are those things that can happen if certain things are not done? You understand? Look at those ethical issues involved. They look at those fundamental principles, whether integrity, objectivity, rational behavior that affect the performance or the demonstration of those code of ethics. You understand? You list them. Then you look at if there are established internal procedures that talks about how you guide against such. For instance, the organizations that they have uh, policies and procedures on conflict of interest, they have policies and procedures on integrity, objectivity. You understand? You look at how do they treat those instances in those policies and procedures. That is what is going to apply to you. Then the next one also to look at the alternative course of action. What other alternatives do you have? So, okay, you look at those policies and procedures, you now take a position from the, okay, yes, I think I have a position or a point to stand on to be able to take a position on that. So that's what that one is saying. Then we go on. If you have any question, please use the chat box. Then we go on again to the next subtopic still under rule of professional conduct. It's called corporate financial advice. Corporate financial advice. What that one means is that, let me just give us in short the summary of this one. It means that where you are the auditor reviewing or auditing the financial statement of your client, you should not be in a position to do what? You're not in a position to give corporate financial advice to your client. For instance, if your client wants to acquire a business, because there is that conflict of interest in that, because you are the one doing their reviewing their financial statement. So that objectivity, the public will not see it when you are giving advice. They will not see it, even if you are saying things from the honest point of view. Public will not see it as being honest. You understand? They will see that because you are working, so there's that influence, so to speak, on whatever decision you take. So at that point, what they are saying here is that when you have such instances, don't, even if they say they want to rely on whatever information, tell them that they should always seek second opinion, second professional opinion. For instance, when shares are being publicly sold, you understand, or public quoted, you always listen to adverts on radio then or TV, always do that. Consult your accountants, financial advisors, and other people that have experience in such matters, so that you don't just give opinion that at the end of the day, if it backfires now, they will now hold you accountable. So that's what we are saying. So when you have such instances, you should always ensure that you don't stand in that position where you'll be giving advice in that instance. So always tell them, always refer them to second opinion. Refer them to second opinion. So that is what that subtopic is all about. Should you have any question, please use the chat box. If there are no questions, I think we might need to go over one question. One question. There are other questions there. I've added more questions. So at your own spare time, free time, you can look at those questions and treat them at your own leisure. So I think I would like to go. Let me see the question I would like to treat. Let's treat question one because of our time, because our time is fast spent. So the question is this: question one. Say a group of small practitioners realized that they had not taken advantage of the opportunities provided by the Institute's mandatory continuing professional education to members. You know, that one has changed now. There's no MCPE again because of COVID-19. It has changed to mandatory continuing professional development. There's no MCPE again. When you have education is when you gather in a place, you sit down in a public space, somebody will come out and give lecture. Now, most things are done virtually using Zoom or other providers. You understand? So let's go on. Provided by the Institute mandatory continuing professional education for members, for members professional development. As a recent seminar which they attended, while waiting for the commencement of the program, one of them overheard a discussion by some other professional colleagues about difficulty they were encountering because of the restriction on the types of non-audit services that can be offered to the audit client. The group of small practitioners became curious and wanted to know more. One partner who was also listening interjected that one of the seniors in his firm would help improve the knowledge on this topic. We are therefore given the responsibility to prepare a presentation to the sole practitioners focusing on ways to improve auditors' independence generally. One, required A1, discuss the current position of independence of the auditor and the basis for the position. 2, discuss the services that may impair the independence of an auditor if provided by the same audit client. B, evaluate the advantages and disadvantages of a firm provision of non-audit services to an audit client. C, evaluate for your audience the argument in favor of and against mandatory audit firm rotation. So that's the question. It's a standard exam ICANN question. So for instance, now let me just give you a tidbit for examination. When you're answering this kind of question in examination, and you have a case study like this or a scenario like this, first of all, read the passage or the scenario or case study like twice before you go to the requirement. Under no circumstances should you go to the requirement before you read the question. Why? If you go to the requirement before reading the question, you have already narrowed your mind. So there are some things that you will not be able to see again. You always be looking out for only those short answers. And whereas you might need more than that. So I always advise, go over the case study like twice. Then you now go to the requirement. Then you have a proper understanding of what is required to be done. That is my own 2 cents about this. And as we go on, we're giving tips on how to answer some of these questions. So let's go on. So if you have a question like this, most of our time, let's look at the question like this. So what it means is they said, discuss the current position of the on the independence of the auditor and a basis for this position. So what they are saying here is that as auditor, you need to be able to what is going position on independence of the auditor. So the auditor must be what? You need to define the two. Auditor must be independent both in mind and in appearance. That's what they mean. Must be independent both in mind and in appearance. That's what they mean. Okay. Your question, you said when you are given a scenario based, so we'll go back to that your question. Let's read this one. When you are given a scenario based question and asked to identify the ethical issues and make recommendations, how do we structure our answer? Do we explain each and every of the ethical code of ethics before relating it to the case? No. What you are when you are given a question like this, what you're there to do is to identify those ethical issues as per you always don't just treat it in isolation, relate it to the question. What are those ethical issues that are expected? At times by giving a case study that you just have maybe just four, not all the five. Unless you have everything, all those ethical issues in that particular case study, then you don't have any, nobody is you are at liberty to write everything. You understand? But if the question has said that identify the ethical issues, that means they are limiting you to those ethical issues as expressed in that case study. You should not go outside the case study, even if you have seven on your at the back of your mind. You're not ready to give them seven. If you have all the seven inherent in that case study, fine. Or if you have maybe four or five, give them the five. Explain it and relate it to that case. Simple and short. There's no two ways about that. That is the way to go about it. You understand? List those ethical issues related to the case study and make your recommendations. Don't go outside that. I'm answering this question based on what you said. You said ask to identify the ethical issues and make recommendations. So that means as based on the scenario. You got what I'm saying here. So if that is the case, but if it's planned, just say that identify all ethical issues or identify those code of ethics, all that you can give them what they say. Nobody's going to penalize you. You understand? So you need to be very, very careful. I hope with that I've been able to answer your question. Let's go on to this question. Sorry for that digression. So, like I said, they said A1 discuss the current position on the independence of the auditor and the base of the position. So you need to tell them that auditor must be seen to be independent and must be what? Independent. That means you have to tell them, you have to define independence of mind and independence in appearance. You have to be able to what? Tell them. So you need to tell them that after you have done that, you need to also tell them that the current position of the auditor in every organization now for the company is that you are not expected to perform non-audit services because it's going to affect your what? Your sense of what? Judgment. Or it's going to lead to going to affect your independence because of the self-review threats, all those self-interest threats, you understand, it's going to affect it. So that is the current position on that. You understand? That's the current position. So you are not when you are the one carrying auditing financial statement, you're not able to carry out non-audit services. Non-audit service relates to maybe recruitment, you understand, internal control, tax advisory, tax management, all those things. They are part of non-audit services. I hope I've been able to answer that. So let's go to the second one. Discuss the services that may impair the independence of an auditor if provided to the same client. So you are going to list all those services that can lead to impairment of independence or impair independence of the auditor. So you list them, like I told us before, recruitment, bookkeeping, and other services related to accounting records. You understand? If you are, for instance, you are the one preparing financial statement and the one auditing financial statement, what are you doing? There's conflict of interest. You cannot review what you prepare. It's not best practice. Financial information system design implementation. You're not able to design their internal control system. They're not implemented it. So you cannot be done to review it. It's not possible. It's not best practice. It's not that it's not possible, it's not best practice. appraisal or valuation services, fairness, opinion, or contribution in kind report, contribution in kind report. So all these ones, actuarial services, all these are services that you render, outsourcing like internal audits, all these ones are services you render that can impair your independence. They are straightforward. I don't think there's any complexity there. But if you go through it and there are complexities, please feel free because we need to do fast so that we don't spend much time. The next question now is B. They say evaluate the advantage of a firm's provision of non-audit services to a client. It has its advantages and its disadvantages. You understand? That will still give us another angle to this question. You understand? That will give us. So let's quickly look at that. Advantages. Advantages. One of the advantages is that it increases the auditor's knowledge, you understand, about the client business and system. That is one of the advantages. Secondly, it reduces the cost, you understand, for the client. And also, because at the same time you are doing the auditing, even financial, you're also doing those, performing the non-audit services, you understand. So you reduce time and you also save cost. So that is those are the advantages. Disadvantages are the public. The public will see you as there's no independent, but they see you as the same body, the same firm, and carrying out the audit. They don't see you as separate. And secondly is that auditors may be put in a position where they will be representing the interests of the management, which if it happens, it will affect the independence of the management. So I think that's for that. Those are the advantages and disadvantages. Now let's look at another one. I'll still answer one question. I'm still coming back to the chat box. Just give me some minutes. Let me finish this one so that there is no interruption. The last question, he said that is the C. No, that is the C. He said evaluate for your audience the argument in favor of and against mandatory audit firm rotation. So you are looking at audit firm rotation. That is not part of this topic, you understand? You know, I can the way they set questions, they can set two topics. I mean, the question they can cater for two topics, you understand? So we need to. So let's look at that. Argument in favor of mandatory audit firm rotation. What they mean by audit firm rotation is this. So we have audit firm rotation and you have auditor rotation itself. So what they mean here is that best practice is that for auditor's rotation, once you are the engagement partner to a client business for let's say 5 years, you need to what? Give a break. Let another person do it. Because if you don't do it, it means that it creates room for what? Complacency. There is this incident that happened during this COVID lockdown, Wirecard in Germany. Go and Google that case and look at it. Their auditor, Ernst & Young, has not reviewed the financial statement for close to 2 years. They just been giving a clean bill of health to Wirecard. And that was when the company ran into problem. There was nothing they could do. You understand? There's nothing they could do because they've been giving the company clean bill of health. They've not been reviewing the financial statement in total. You understand? They've not been doing a thorough review. They just say nothing has changed. They just believe that everything is fine until when the thing happened, that the company ran into trouble. So please, create time and look at it. Wirecard is on Google. It's a German company. Check Wirecard and Ernst & Young. You'll see the fact of the case there. That we don't waste our time. So what they are saying there is that when you have, so once, like I was saying, so as the engagement partner, you need to give room. So you need to give some space, you understand? Then you come back later. Let another person take up the job. And the same thing for audit firm rotation too. What it means here is that normally there is no standard number of years that an audit firm should work with a client. But once you are saying you work with a client for at least like 7 or 10 years, you might advise your client they need to get another firm, audit firm, to continue with that. But that is the only way you can create more competitiveness amongst the audit firm. If one is the only one doing it every time over and over again, there might be room for what? Complacency. So there's info. So those are the things you are looking at under audit firm rotation. So it's the topic under chapter 15, current audit issues. If you want to read more about it, go to your chapter 15 of your ICANN study pack, advanced audit and assurance ICANN study pack. You'll see it there, chapter 15. You'll see it there. Now let's look at the advantages or argument in favor. In a long-term audit relation, the auditor may become too close to management of the client, and this may weaken the operational skepticism and independence. That's what I'm saying. Complacency. That's another word. What is what they are saying here? That's the word. That's the way it's supposed to be. But in short, it gives room for what? Complacency. So you'll not be able to carry out your professional judgment, operational skepticism, all those things will be what? Will become eroded. This may be more likely to compromise when disagreements with the management occur in order to preserve relationship and the audit. You understand? Another advantage is that, argument in favor of management is that even if rotation would not protect the independence of the audit firm, it improves the public perception of independence, you understand? So may increase confidence in the quality of the external audit, you understand? So the public, again, they beam their searchlight. So when you give room for such as in audit firm rotation, you boost your confidence, the level of confidence imposed on you by the public. That's what happens. Those are the arguments in favor. Argument against is that there may be negative effect on audit quality and effectiveness. That's when you do rotation. That new firm that is coming on board, before you gain understanding of that client business, it takes time. So what they are saying here is that at the initial stage, there may be poor quality or low quality of audit job done until when it gets more tracked, you understand, gets more information about the client. Other arguments against are there's also substantial cost in changing auditor regularly. So when you change your auditor, if you have an existing auditor now, it can maybe increase it by 10% or 15%. If you have a new audit firm, you understand, it might charge arbitrarily at the first time. That's if you're not using low balling. You understand, low balling when the charge is very low. So you want to charge based on the volume of work at his disposal. It might charge exorbitantly that or arbitrarily that you might be thinking that have I not made the mistake of changing the auditor? The audit firm. So that is what we have. The cost also. And there's also another evidence that they say there's no evidence that compulsory audit firm rotation has a positive impact on auditors' independence and audit quality. That is, when they change, it doesn't mean that as there is no proven fact that when they change audit firm rotation, it leads to more auditors' independence and improves audit quality. That's the other argument against. The next one is the market for auditing listed companies is dominated by the big four audit firm. If this domination of the audit firm market continues, which is probable, it will be difficult to change auditors easily. The other large firm may not be available, may not have available resources to take on the audit and may not be independent because of the non-audit services that they already provide. You understand? So that's what they are saying. What they are saying here is that we have the big four: Ernst & Young, PwC, KPMG, and Deloitte. What they are saying, the only few companies can afford their fees and afford to pay their fees. So what they are saying here is that if you allow for more audit firm rotation, you get to a point that the big four, you'll have used all of them, and there will be no audit firm again and you want to rotate. So that's what they are saying. So that's what they are saying there. That when that one happens, what will be the fate of the small and medium audit firm? I hope I've been able to answer the question. So let me go back to your chat box. Let's see if there's any question there. That means, so there's a question again. It says, sir, when we are given a scenario-based question and asked to identify, when answer this one? Okay. Okay, I've answered your question. Okay, thank you very much. No problem. Thank you very much. So I was saying, I said that there's another angle to this question, especially the first one that talks about independence. And that angle, like I said, ICANN is not, this is the model answer. model solution. That is the typical solution. There's another angle to this question. Now, how many of us have has heard the word Chinese wall before? Chinese wall technique in auditing. Now, why am I bringing this up? Now, Chinese wall technique is a technique whereby an audit firm will set up parallel engagement team that will handle different aspects of the client business. Parallel engagement team means that if you belong to engagement team A, you can never be found in engagement team B. That's what it means. You might be working for the same client, but there will be no point that your line will cross. There will be no point that there will be cross carpeting. No. If you are for engagement team A for client A, that's what you'll be doing for the rest of the time that it becomes your client. And if you're an engagement team B for the same client A, you understand? That is the same thing you are going to do. So you are not going to, for instance, what I'm trying to say is this. Chinese wall is a technique where you can use to bridge the independence. But to the outsider, to the public, you might not be seen as independent, so to speak. But for somebody that understand, that has looked at it critically, we understand that yes, you are truly independent. What am I trying to say? If you go to the Big Four now, they will have clients that they render non-audit services to. And most time when they do that, they have different things because their offices have already been componentized or has been divided. That's the big, let's not use big grammar, has been divided into different components. So for instance, there are people that what they will be doing will be basically on internal audit. There are some that what we will do will be based on what? Taxation. Some that what we will do will be based on what? Auditing of financial statements. So in the Big Four now, when they are going for an audit, and they say the client say that they need services of people that are experts in taxation or tax matter, tax management, or tax advisory. All they need to do is to get another team that is not part of the engagement team already. That team is that team that is going to go and work on the tax aspects or the non-audit services for taxation for the same client. So at that point, there will be no situation whereby their lines will cross or their scope of work will cross. It will never cross. That's what they mean by Chinese wall technique. So if you're able to implement Chinese wall technique effectively and efficiently, then the independence might not be completely eroded. But to the public, so long as it's the same audit firm that is grinding the job, they don't see Chinese wall technique anyway. They don't see the Chinese wall. They just see it as one large audit firm. Understand? So they will not, that independence to them will be eroded. So that is the angle at which I want us to look at it. So if there's still more questions, I think we still have some little time before we go off. If you have any question on this topic that we have talked about, please raise your question. But I'm finding time to look at this question and other questions that are in this material. Please, it's not for fun. Try and familiarize yourself with these questions and lay hands on as many questions as possible, past questions. Treat as many questions as possible so that you can understand the angle or the way and manner I can set or mark their exams. It's very, very important. It's very, very important. Please don't joke with it. It's very, very, very important. So try and get as many questions as possible. Solve it. Even if it's a CCA question, solve it. Even if it's CIMA question, solve it. Any question at all that deals with audit, advanced audit, and assurance, please look at it closely and critically. You understand? So that at the end of the day, we'll meet another side that will celebrate with you. You understand? So that is that. In the answer of any other question, I think we'll be, let me see, another question. Okay. to me privately, okay, hello, sir. You can give like 20 minutes to compensate for the lost time. Thank you. Okay, 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 okay. No one. Okay, so what else can we do? Can we look at another question? Let's see if we can quickly look at one more question before we call it a day. If I have some little time. Okay, there's no other question in this angle. Okay, okay, okay. Let me see what I can do. Now let's look at, let me, maybe I'll need to, there's no question. So anytime you have any question, you can get back to me. So let's look at this topic, the next topic, the audit approach. The audit approach. Now, anytime there is an audit engagement, I don't know, I always tell my students that there are different, there's one thing I call audit circle. What's audit circle to me? It starts with what? Audit planning. After audit planning, it goes to what? It goes to gathering of audit evidence. Then after that one, it goes to what? Evaluation and review of audit evidence. Then after that one, it goes to what? The next one, that is reporting. That is the audit circle. So it's a chain, it's a circle, it's a chain reaction, you understand? The chain of events. Now, what this topic centers on, it centers on the audit planning. Once you have, like I told, I always tell my students, there are three letters that are important in every audit engagement. There are three letters. The first letter is letter of engagement. The second letter is management letter or letter of weakness. The third letter is called written representation or letter of representation. Those are the three letters that are always important in every audit engagement. It's very, very important. There's no audit engagement that you will not make use of those three letters. The first letter is letter of engagement that signifies the contractual agreement between the auditor and the client. So if you are going to audit a client and you don't have that letter of engagement, you have embarked on an exercise in futility. That's what it means. You have embarked on an exercise in futility. So you must have that letter of engagement before you commence any audit. In fact, that is what gives you the approval to go ahead on that audit. So if you don't have that document, don't proceed on the audit. The second letter that I talk about is called management letter or letter of weakness. Now, this is the letter that comes at the tail end of the audit. When you are presenting your draft audited financial statement to the management, it's always accompanied with that letter of weakness, or you call it management letter. So that letter is letter that specifies those weaknesses in the internal control system of your client business. Letter that contains weaknesses in the internal control system of your client system. For instance, if your client has not been carrying out a periodic bank reconciliation statement, it will enter the letter of weakness. If they've not been remitting the statutory deduction, it's part of letter of weakness. It will enter. You understand? If they've not been attaching supporting documents for vouchers that they present every time, it will come part of the letter of weakness. All these are information that will be contained in letter of weakness that will be presented at the end of the audit to the client and say that these are the things we observed while performing the engagement. And you give them timelines on when to resolve this matter. So when next you are coming for the next audit, you are going to start from that. Well, where have they been able to resolve those weaknesses? Then the third letter is called management, and it's called a letter of representation. That is the letter that is issued. It performs dual role. One, it absorbs the auditor of any fault. For instance, letter of representation is always presented and it clearly states the duties of the auditor and the management. You will see here, they'll say that management is responsible for the preparation of financial statement, management is responsible for the preparation, putting in place sound internal control system, management is responsible for the prevention and detection of fraud. You always see it there. And management is also responsible for giving full access of information, fact, everything to the auditor. You always see it in that letter of representation. So it absolves the auditor of any blame, most times of personal negligence. The second function that the letter of representation perform is that it's also a tool that the auditor use to gain access to the client's third party vendors. Now, if the auditor wants to secularize the vendors or third parties, the account receivables, those customers or vendors or whoever vendors, you understand, it doesn't have any relationship with them. It is that letter of representation that will still be presented. It will be written by the management, it will be written by the auditor, but most times the auditor will use the client letterhead and it will be signed by the client's management. So it will assume that that letter is coming from the management. Why is that letter like that? If the auditor writes it using his own letterhead, the third party might not honor it because it doesn't have any relationship whatsoever. So when they write that letter, the vendors, they will acknowledge that letter and they will oblige the auditor or whatever information. When the auditor wants to secularize the debtors, is at liberty to do so, so long as the letter of representation has been initially sent across. You understand? So those are the three letters. So if you want more information about that, you can Google it or ask me more questions. But there's a question. Let me quickly take this question before we move on to this topic. You said, sir, who is an assurance provider or an engagement assurance? Now, anybody that gives information, that the client, anybody that gives information that sort of gives the client some level of comfort, is an assurance provider. You understand? It's an assurance provider. Most times, it's the auditor that is seen as the assurance provider. Most times, because for instance, when the auditor wants to embark on the engagement, the auditor is overseeing what the management has done. So it's reviewing the work of the management. Management has been appointed by the owners of the business to help them because they don't have the expertise. So that's why they employ the management to run the business. Now, when they've run the business the best way they can, the auditor will now come and check if they have done rightly or if they have acted in the best interest of the owners. So that is where they provide some level of assurance to the owners, say that yes, the management has acted in their best interest or not. That is the assurance, engagement assurance or assurance provider. That is what it means. I hope I've been able to clarify on that. So let's go on to that topic. I know our time is fast spent. As I was saying, so when you're about, I've explained those three letters now. So let's go on. So audit approach is the strategy that the auditor wants to use, external auditor wants to use to gather relevant and reliable audit evidence to support the expression of an opinion on the financial statement that is about to audit or to review. That is audit approach. That is what? Audit approach. How? Maybe you need to throw more light on what you mean. I've explained who an assurance provider is and what is assurance engagement. I've explained it to you. Unless maybe you need to throw more light. Okay. I don't seem to understand fully when we need to write a memo, internal, when answering a question. Please hesitate. Now, is it coming from the same person? No. Now, most times, because you are writing a report, And also at times you need to look at the tone of the question. If the question says that write a report, just know that it's more of a memo. It's more of a memo. So you need to write a memo, and you know how the memo is. You write it to from subject, date. You understand? Introduction, body. You understand? Then you talk about your recommendation, everything you want to add. Then when you are done, you sign, you put your name, put your position, and that is all. So it depends on the question. It's not the time that they will ask you to write a memo. But if you look at the tone of the question, you see that it's talking about writing a report. Then know that you're going to write a memo. That is how I can say. So to throw more light on that question on assurance provider, like I told us, an assurance provider is someone that has been engaged. An assurance engagement it means when somebody has been appointed independently to give sort of confidence on financial statement that he has reviewed, with the hope of what? Protecting the interest or explaining how the business has fled, how the business has performed to the owners, so that they can have respite, they can have relief that, oh, the person that I've put as the head of my business is performing very well. If it's not performing very well, it is from that review that you will know. So there's a thin line between auditing and what? Assurance engagement. There's a thin line. It's a very thin line. And that thin line is that for that in assurance engagement, you give a level of confidence on the financial statement that has been what? That has been audited. That is what it means. Unless you want us to go over the assurance engagement, I don't have that time. Otherwise, I would have gone over it again. So that for assurance engagement, there are 5 elements that you need to have. There's a 3-party relationship. That is the practitioner, which is the auditor, the responsible party, which is the management, and the intended users, those are the public. That's the first element. Second element is the subject matter. Those are the financial statement that you are using. Those 5 components: statement of financial position, statement of foreign and comprehensible income, statement of cash flow, note to the account, statement of net equity changes. You understand? Those are the 5 financial statements that are talked about under subject matter. The next one is sufficient and appropriate audit evidence. So you should be able to gather sufficient and appropriate audit evidence anytime you are carrying out your work. Then the 5th one is reporting. When you are done with the engagement, you should be able to write a report. So in every audit engagement, when those 5 elements are not present, you don't have an assurance engagement. Rather, you will have what is known as what? Audit-related services. Where those elements I've mentioned, those 5 elements that I just mentioned, 3-party relationship, subject matter, criteria. Criteria is whether you are using IFRS, subject of that is the benchmark, what you are using as the benchmark for your financial statement. When you don't have 3-party relationship, subject matter, criteria, subject and appropriate audit evidence, reporting, where those 5 are not present, what you are doing is that you are performing an audit-related services. You are performing audit-related services, or you call it non-assurance services. That's what you are doing. But where those 5 elements are present, what you are doing is regarded as what? Assurance engagement. It's called assurance engagement. I hope I've been able to throw more light on that. So I think I will not be able to talk more on this. I think we'll take it off from there next class. Sorry, like I said, it's the internet that has been erratic. I pray that we'll have such interruption next class so that we can finish in good time. And by the way, the exam is fast approaching. Please, every little time you have now, use it judiciously and make sure you use it to cover as many grounds as possible. What we are giving you is not everything. We believe that you have some basic understanding of advanced audit and assurance. So you are just trying to refresh your memory. You understand? So when you pick up your material, you'll be able to understand, you'll be able to assimilate very fast, rapidly, unlike before. So I think, so at the end of the day, the whole essence of this exercise will not be defeated. Please find time and read. Don't wait till the last day. Like I always tell my students, know yourself. That's what Socrates said. Know thyself. You need to know yourself. Know what works for you. What works for Mr. A might not work for Mr. B. So study yourself and know what works for you. So I think we can stop here unless want us to continue. I think we'll be able to do justice to that. If you have any question, like I told you, you have my number. My number is 080-3632-6648. That is my number. I will type my number here in case you want to reach me at any point in time. That is my number, 080-3632-6648. My name is Adebayo Desali. So I hope you'll be able to see it for everyone. Let me type it again. So that's my name. So in case you need any more information, I'm always available. So, moderator.
Sir, thank you, sir.
All right, sir. Thank you very much. See you next week. Have a lovely week ahead.